Hi, everybody. This is Lee, and we're going to talk about support and resistance for the month of February 2023. And we're going to do that looking at a chart that's provided by the Trade Navigator software. This is a monthly SPY chart. The SPY is an ETF that tracks the S&P 500. That's the 500 biggest stocks on the New York Exchange. And what I've thrown on the chart here, the primary tool that I'm going to show you, is a 3-period moving average of the highs and a 3-period moving average of the lows. They create a nice band that price trades around. And as you can see, they're already sitting out there for the month of February, even though as of this point, there is no February yet. That's because I calculate them as of the January price bar and then displace them forward 1 bar in time. Now, this exact same technique that I'm showing you here on the monthly chart will work on any time period. I use the exact same thing on weekly charts, daily charts, hourly charts, half-hour charts, 15-minute charts, 5-minute charts. It just doesn't matter. It looks the same. It fits the price action in a similar fashion, and you do it. You calculate them just the same. The most important thing isn't so much these bands, though. The most important thing is price action. What is the market doing? And at this point, the trend is down. How do I know that? Well, for a market to go up, it has to be making higher swing highs and higher swing lows. Obviously, that's what we were doing 2020, 2021. They were doing nothing but go up. When we started breaking down in early 2022, we took out a previous swing low, and we've continued to do that. We have consecutive lower swing lows now, and we have consecutive lower swing highs so far. Well, that's a market that's going down. So at this point, the trend is down. We don't have a higher high, swing high of any kind yet. We do have some clues that one might be coming, though. One is the fact that we actually have a close above the upper band for January. That hasn't happened, obviously, since December of 2021. So that's new information. The fact that this is an inside bar is different. That doesn't happen very often. You usually have to have a strong bar to close above a band. So it's weird that it's an inside bar that does that. We'll just have to see how that plays out. The other thing that's coloring my judgment is I believe there have been 12 bear markets, which bear market is anything that drops 20% or more from the high. I think there have been 12 of them since World War II. 7 of them have ended in October. That's a pretty amazing percentage considering no other month has more than one. And do you know what this low is right here? Yeah, that's October, October of 2022. So does that mean that's necessarily the low? Well, no, of course not. But I like the chances of it being it. And I like the fact it's hit this 55 period moving average as well as it did too. But I sometimes use 20 period moving averages and 55 period moving averages, and obviously the 55 looks really good here, which is why I have it on the chart, but just kind of interesting. So I have reason to believe that this could be going up from here. If that's the case, then I originally go in here and go, well, the bands, 409 is resistance, 374 is support. But if they're going up, 409 is probably not resistance. That's way too close to price. What can I look for next? Well, the next thing would be the previous swing high up here, which is, let's call it the 432 area. So that's the next thing I would say is potential resistance is 432. And if I come down here and say 374 is support, but if the market's really going up, it may not go that low. Actually, the last 3 months haven't gotten down to the lower band. So I pick a midpoint, literally just halfway between the bars and say that, between the bands, I'm sorry. And I would say, well, that's also a potential support level. That would be roughly the 390 area in the SPY for February. So those are potential support areas. Now, I've just given you 2 potential support areas, 2 potential resistance areas. Which is it, Lee? Are you schizo? How do you know what's it going to be? Well, I don't. But what I do have is the ability to go down in time periods and use this exact same technique to see how the market is setting up as it approaches these various areas. You can use weekly charts, daily charts, go down as far as you want to try and watch the price action as it approaches these areas. And they are areas. I don't get stuck on a specific price and say that has to be it. It's roughly an area. And the lower time period will usually be more exact for you. That'll say, well, no, here's the band. They don't get below that. They're going up. Uh, so anyway, that's how I do support and resistance. That's what I think it should be for the month of February in this market. And I'm kind of leaning to a positive side. I think we probably are looking at the higher support, let's say support 390 and resistance 432. I think those are more likely for this month. But again, go down in time period and look at them to see what's going on. And I will warn you again, you get down too far in time periods, you could be a monthly based trader here thinking you're trying to buy the monthly low. Once you go down to that 5 minute chart, you're a 5 minute trader. It's so hard to get back up off of that and remember that you're trying to trade a monthly price bar. Uh, Really difficult for most traders to do, but you have to. You go down to fine tune your entry and limit your risk, but then you got to move back up in price. But that's a trading thing, and that's not really what we're talking about. Support and resistance is the key here. 374, 390, 409, 432. Those are the areas we're looking at for February. We'll go down in time periods to see which one of them seems to be the one that really holds true. Good luck with your trading, guys.